Hello and welcome to the watch list on the Bullishbrs YouTube channel. I'm Jeremy and I've got to say thank you. Thank you so much for all the likes that we've been getting. This is really helping us kind of defeat the YouTube algorithm, and actually we've got quite a bit of inflow of views as well as subscribers. We're pushing for that 100,000 subscriber mark, and we're accelerating towards it at a blistering pace thanks to your support. Just want to give my appreciation for that outright. Pretty awesome to be in a position where we are constantly providing value to anybody who will listen and who will watch, and we thrive on that. We really are here to sincerely provide that value as much as we can. Anytime I can call out price targets and have a 94% accuracy in front of a live audience, that's pretty awesome, and it feels pretty awesome to be able to do that consistently, whether I have a guest on or not. I say guest. Let's go with co-host, because that's really what Matthew Tuttle is to me. He's like a co-host. We're like the dynamic duo of stock trading lately. It's pretty awesome. Anyway, enough boasting about myself and talking up somebody, but let's get to it. We got some fun stuff to kind of look into market wise, and then I'm going to break into kind of what the tariffs are really going to do to the market, and something that maybe not so many people are looking at, but probably should be. I'll get into that. Also, I want to kind of go over QQQ to kind of get the litmus test of what the current conditions are doing in the market. And not to toot my own horn again, but every target's been met on QQQ without a doubt. We've been just absolutely slaughtering it. Over at the Bullishbrs community, we live stream every morning, and we've been able to trade this volatility and thrive in it. And not only that, it's a great opportunity to teach others how to master price action, and that's what we do inside our community. Outside here on YouTube, we provide that value even further in just showing people that the market doesn't have to be a scary place if you just use basic logic, ignore all the chicken littles out there clucking at the sky's falling and selling you that negativity. We got the positivity over here, and it's worth looking at. Okay, let's break into QQQ for a moment and kind of weigh out the market. So you can see I've got a pretty messy chart. There's a lot of stuff on here. Stuff I can probably delete that I haven't used in a long time. I mean, these old measured move targets are pretty obvious, pretty easy to nail. I'm going to keep that one for later reference though. So what I'm looking at is this trend top to bottom. We know, and we've said this 1,000 times, we could keep pounding the table on this. Markets love to give impulsive moves and then give half back. It's almost like a pendulum, if you will, swinging back towards the middle. And we achieve this in every time frame. Here's a daily chart. We're pushing right back to that daily 200 period, which everybody loves to look at. By now, I don't necessarily need to use it with just price action. I've been able to solve this, but it's there to be a good reference of okay, let's confirm what we're really seeing. So we're seeing a return to the 200. We see a very clear double bottom here in spite of my thousands of drawings on here. And we can see that we broke a key resistance level. That 484 was pretty nice, 485. Here we are at a primary reversion target, and that's just this part of the trend. From here to here, split that in half, and it's about there if you kind of weigh out the middle of consolidation here. So this is a reversal. You take this trend from top to bottom, but average it into this consolidation, and that's the target we're looking to. Happens to be the same as a measured move target. Let's go to a 2-hour chart and I'll show you what that looks like. So we take the bottom of this, we find the primary here. It pulled back, it gave half back. Lo and behold, we come up to resistance, test it, came back to half back again. Okay, support confirmed. Let's split the difference in this consolidation. There's your measured move target, and it lines right up with that 494.60 pivot. Pretty clean, right? So when you can really analyze price action this quickly and this accurately, it really makes the market so much easier to deal with this volatility. And that's why we really pride ourselves on not only teaching people how to do this, but we'll give you the fish too. We'll show you where those targets are. They're not hard to find once you master this. Go out to a daily chart. Yeah, we're making progression back to a possible reversion trade, which half of this whole trend here from top to bottom is right up here about 503.50-ish. And that's a lofty target, but it's not beyond reason. The market tends to do this more often than not. So, write that down on your post-it note, half and whole. Just stick that as a rule to the edge of your monitor, and that's half the battle. The rest is just finding short-term price targets and scalping them or swing trading them, using them as investment opportunities, whatever you want. That price action is yours. You get the chart. You get access to data like previous generations would dream about. Use it. All right, moving on a little bit more. Let's go to the weekly chart. So here we have our typical corrections in the market trend, and we're right on base. We came into a pretty steep correction. I mean, you got the tariff stuff swinging around, and yeah, everybody's got that negativity, and well, negativity sells. It also sells price action, and usually we find equilibrium. You can see it happening right here on the chart. It's just, you're like the third person in the room calmly examining the argument between two other people, and you already know the outcome. You already know where it's going to go. You already know who's going to say what. It's just, you can read people, you can read the room. That's essentially what the chart is. You're just analyzing the argument between bulls and bears, and you already know where the outcome is. It's an advantageous place to be. I wanted to look at a couple of things that are flying under the radar that are starting to make sense. And realistically, if you think about why the hell would anybody want to go and play with tariffs anyway, and it's really just to pressure other governments to kind of play ball with you. It's not really an intimidation factor. It's not, I'm going to take over your country or this or that. It's simply put, it's defending domestic production. I mean, we have kind of fallen away from domestic production in this country, so much so that we've become dependent on many other countries for their exports to make our economy work. So we import a lot of stuff, and generally we've kept those tariffs or taxes on those incoming goods fairly low. And inversely, our exports are taxed very high by many of these same nations we trade with. So realistically, whether you dislike somebody for sitting in the White House big chair or not, doesn't matter. Take your fear and your emotional, irrational responses out, send them out the window, and just focus on the logical thing to see. Opportunities for Earth, digging, mining positions, raw materials, that sort of thing in the U.S. That's what we're looking at as far as being able to benefit from there. Start with the basic materials and start with natural resources, rare earth metals, energy resources. Pretty much everything we're sitting on top of has been protected for a long time, mind you, but that's a whole nother argument. The idea is we have a vast amount of resources in the U.S. and more than most people are letting on. Would you believe there's actually a U.S.-based rare earth material company? Yeah, that happens. Let me get my other list up here and we'll show you what you mean, or show you what I mean. So one of the ones we look at with energy, and one of the kind of most important parts of a battery and many other things is graphite. And EAF here is a graphite producing U.S. company, and it has been beat the heck down, and we have quite the trend for a potential reversion play on this. I know it's a penny stock, but have some reason that maybe we could see things start to make a little bit of a move here, especially since we have a rather nice looking reversal here. We have the old classic head and shoulders here. Yeah, the right side of this is a little higher than we'd expect. Typically these tend to be bearish, but market structure's done capitalizing on this. The hype wave is over, so to speak. Now we're looking for consolidation in range and potentially a reversal. So if we get back above the neckline of this, which is at around $1.90 or so, we could see a good swing out of this. And if the tariffs do the right thing and we don't have to import so much of this stuff, these guys are going to benefit, and thus U.S. jobs are made, U.S. economy is more independent. You get the picture. It's all the long game. So in this, we should see a decent swing. We might even see some buyers fall in more recent times. And this volume sucks. believe me. But when you get ahead of the theme and you start to realize that this is something we should be looking at, and you get it before most other people, you don't end up chasing like these guys did. You end up getting in it at a nice, clean price, and these guys become your exit liquidity for taking profit. But overall, this is looking like it could be something that would be worth watching. And if it turns around, I'm liking a short-term reversion to this LZ up here. Maybe we see about 530, 525 or so. Short term, of course, you're going to see a couple of pivots swing into effect here, maybe around 265. You've got the neckline around a dollar, $1.90 or so. Let's just split the difference. Look at the trend here. It's pretty obvious. There's half of it right there. Maybe adjust that a little bit. $1.50 or so. But when you think about a $1 stock, a 50-cent move, that's a 50% gain in your pocket if you profited there. Price targets are easy. Just have to swing them. Wait for this to finish a reversion. Maybe give us a little bit of support down here at about $1, and maybe it'll start giving us some long-term plays. Down the road, yeah, this thing, it's been around here since 2018. It definitely got some hype. At one point, it was worth $21.75 to somebody. There might be bag holders there, so if it gets that high, definitely look to take profit and be nimble there. But what I like to not see when I'm looking left on a penny stock, I look at all these down here. There's earnings and dividends and all that happy stuff. It doesn't pay much of a dividend. It's a penny. But what I look for is reverse splits, and so far I see none. That's not a bad thing. And even though it's trading at $1, it's listed in a stable environment. As long as it holds above $1, it should be okay. It should be out of the woods for a reverse split or a threatening letter from the the exchange. Keep an eye on this one. I think this is going to be one of the things that might benefit from these tariffs doing what they're supposed to do and bringing back local production of stuff, domestic production of stuff. Another thing that Matthew's been looking at, and I'm beginning to really see an advantage to, and FCX. Of course, we got many resources coming out of that. Before we had this bearish measured move target, nailed it. We are not going to necessarily break our elbows patting ourselves on the back for that, but boy, that was a great buying opportunity to go right back to the middle. Reversion trades are easy, guys. That was an easy one. I should probably turn this green now because that's what it did for us. Maybe not that bright of a green. Come on now. Do that one. There we go. So we're looking for, also there's a trend line here, angular resistance right at the 200-day. I think a lot of people are going to start to take profit there, so you should see this pull back. But if we break above this regression line or the middle of that trend reversion here, about 43.50-ish, we should see some momentum pick up and maybe give half the previous trend back and find this liquidity zone again from where there were some sellers before. So if we extend out of this, look for a couple of short-term targets too. Top of the gap there. Everybody loves to see gaps fill. It's a magnet. It sucks people in. People trade it, whatever. Look for a breakout here. If we continue here, about 44.70 is a pretty obvious target for short term. It's about halfway to the liquidity zone, say about 45, 46 bucks. Pretty reasonable. It could trend here. This is, again, domestic production taking effect here. Choppy chart in beginnings, but when things were really turning around back in 2020, it was nice and steady. It can do that again. This could be the new support level for things that happen after 2020, and give us some domestic production. Well, we know where the targets are. We know what these tariffs are supposed to do. Let's hope it makes sense. Another couple of companies to go through. We have M&P Materials here. I'll have to look at the description on the company, but I think these guys are out of Texas, if I'm not mistaken. I could be wrong. I hardly look at that stuff. I'm always looking at charts and looking for reasons to trade. So we've talked about this in the past. We found liquidity zones pretty obvious here. Pivot area, market structure done its thing. Now we're above the market structure resistance area and we're starting to trend. And weekly, we're right on that 200-week moving average here and starting to push on above that $25 zone. We're at 27.07 currently. I like to look left again and plot out one more reversion target. I'm going to split the difference in this range here and just kind of come back to this candle here. About 31.50 is a pretty reasonable reversion trade out of market structure here if we can get above the zone, and we are above the zone. Liquidity was right in here. Sometimes you got to look at a weekly chart to see this. This thing doesn't move like ridiculously fast, but for us long-term traders, it makes sense. Pretty easy zone to read right there. Now let's go to the daily chart. So we've kind of oozed on through there, A to B in the liquidity zone. We beat out all the bag holders from the previous wick, the people who chased it. They're okay getting out even now. Maybe they come back in, maybe they don't. Some people just don't buy it again. They get gun shy. That's okay. We're in it to win it, and we know where the targets are. So if we hold support here, say around 26.60, we were looking for a nice swing to swing up to that reversion target, and it's plausible. 31.50, pretty easy from here. It's not that far away. And yes, this thing does move pretty slowly. It's FCX, but for people with larger size positions to move around, this is the kind of stock you want to trade. For instance, I had talked about a trade that has been on for a while for me as a retail trader with my size. I'm able to move in and out of it freely, but large money may have an issue because it's only got a certain amount of shares in the float, and some of your major players won't tend to touch those as much. But I'm pretty happy with my position in it. I think if you guys know what I'm talking about, it's NFE. It's an energy company, and they are in infrastructure. Let's go to the chart. Whoops. Giant double bottom reversal here. We're in L2, I like to call it. We're back in reversion target and nailed that today. Pretty easy mark, 12.35. You're seeing some profit taking now. I don't know that I'm the guy who's egging that on. I'm not trying to pump stocks here. I'm just trying to call out targets. They're pretty easy. But you get the idea. Getting in at 970 was a good idea. Once it broke resistance there, it was a pretty easy shot, melting through this liquidity and pushing up to that reversion target short term. Long term, I could see this trending all the way up to about 1580, which is a previous high, and it's splitting the difference here. Just looking about middle of this measured move. We've traded this before. We've done all this. This is round 2 fight. So we want to see this not necessarily become the fatality point if you're thinking Mortal Kombat, but we're looking for this consolidation to break and continue trending higher. Mind you, there will be another short-term target right here, about 14 bucks. Whole number, pretty obvious. Keep an eye on that. Maybe paint that one yellow. And effectively, a move from here to here, pretty easy trade if things hold here. There are some profit-taking traders in this here at the 12.35 mark. It was pretty obvious. It's just consolidation in this previous range. It's obvious. When you look at enough price action, realize that yes, it looks easy to you, and if it's easy, everyone would be doing it. A lot of other people know how to read price action. They all look at the same charts. If they've got enough seat time, it's blindingly obvious that's a target. So here we are. Wait and see what happens with this. If it consolidates here and stays within a range bar from the day here, we got a pretty good shot of continuing higher. But if we break support around 12 bucks, sure, it can pull back and test this liquidity zone again. It might even test the bottom of it, which is about half back of the trend. Imagine that. So be nimble in the short term, but in the long term, it's got some pretty decent price targets to get to. I think AI was telling us that the only thing that was a drawback, it's a 6 out of 10 according to ChatGTP, but when it comes to the concerns, it was concerned about the credit rating. Also, you can see they obviously quit paying a dividend at this point. So yes, they've got some cash flow issues maybe, but for all intents and purposes, that investment is going towards growth. And with the ever increasing demand on the energy grid, as well as the added, many server farms that are going to be drawing on the grid in the near future with AI and quantum computing and what have you, things are going to start getting interesting for the energy sector. And this is a company that's in the infrastructure side of this. This is transfers, logistics, power plant building, basically the shovel and pick salesman providing the equipment to get the job done. That's what these guys do. So that was an obvious trade for me. When you get into themes like this is pretty easy to follow. And of course, EQT is another natural gas that we entity that we tend to trade. Get in here. Obviously hit our target. Some will see this as a triple top. We beg to differ. I think we're going to start trending here if we can hold 53.60. It's got a pretty good shot of finishing a pretty sizable move. Let me borrow this. I'll show you what I'm talking about here. So we have, the primary here, and if we split the difference, stack it right on that mean, right in that pivot here, gives us an obvious bull target, and two of them actually. So you always go to the half and whole. So half an mm here, about 55.40. A full mm up here, you got chance of hitting 61 bucks. Nice. So watch for a trend breakout here. We got to melt through some bag holders here that chased this this previous high. That wick there is obvious. There were a lot of limit orders there. If we can melt that zone, sure, we can start shooting for this target. I would say maybe target about the upper fib range here, about 60.50 for starting to become more nimble and maybe taking some risk off. But so far, this is looking like a pretty decent setup to get there. So eyes on EQT. Obviously, we're going to be consuming some energy in the near future. This fills the gap until we get through not only the time it takes to build infrastructure in the nuclear sector, but the permitting time is horrendous. As you know, we were talking to Mr. Blackman last week, and yeah, he confirmed that it takes a long time for nuclear to really start working. Yes, we got ahead of the hype wave and the theme of getting into the smaller nuclear stuff. We've killed that. I think there's some capitalization that needs to happen there, and some people need to realize that, hey, this is going to take 10, 20 years to really come to fruition before it starts making money. Let's relax here and look for opportunities to get in at a better price now that we've made the trade. We'll look for investment later. So if you're looking at things like OKLO, I mean, they move. Don't get me wrong, but that halfback was pretty obvious. It's already been done. This will probably consolidate in this range for a little while, so there's still some good range for day traders and swing traders alike to be had in this, but just be nimble and be aware of the fact that this is going to take many years to come out into a likable range. And if market structure has anything to do with it, we know what tops like this tend to look like down the road. So I'm not saying short this, but I'm saying be aware that pulling back to these previous levels, it's pretty obvious that that is what market structure is going to tend to do. So just be on top of your game if you're going to look at this. It does look short-term bullish. We do have the 8 crossing above the 20 happening here. I don't tend to use moving averages, but I'll use it to verify what I can see. So short-term, we could see a quick pop in this, but just remember, it's going to take a while for that to really make money, and let's just be patient with it. For now, scalp it. Couple others I want to get into, and this is another Texas materials company that I just cracked open today. I haven't done any dope on this chart, but let's reset this real quick here. This says I like market structure all over it. There's your return, half back, all that happy stuff. This is where that consolidation period takes place. Downright penny stock. I mean, just trading at 45 cents. It's not looking so good. On the daily chart, I don't see any earnings announcements, but I don't see any reverse splits either. So we could see a possibility of market structure starting to work out here. So let's start popping some range out on this thing. I can see a pretty obvious reversion target up here at about $1. That's a pretty nice, gain from here. It's 100% from here. Nice. Look at resistance here. There's a key area here. We're right on top of market structure pivot, about 43 cents. Again, this is an outright penny stock. I know that a lot of investors don't like to look at these, but don't ignore them either. Even if it does have a reverse split, there is some obvious targets to be had here. So liquidity for the scalpers are going to look for 54 cents from like 43 cents. That's a pretty nice return percentage-wise for day traders and swing traders alike. But if we melt this zone and we start to get it escape velocity from our previous high, and you can see the wick lines up, we could see a reversion trade in the future of this to run to about $1. And as long as they're not getting too many threatening letters from the NASDAQ, it might make sense. But again, this is a local producer. You know, minerals and rare earth stuff is kind of what these guys do. And if tariffs do the right thing to where we're not importing as much of this stuff, we can start producing it locally. The attention is going to fall right into companies like this. I can't make any guarantees, but it's looking pretty promising to me. That's just my opinion. Another one to look at is straight up. They call themselves USAR, USA Rare Earth. And again, I'm going to keep a longer term look on this one. It's fairly fresh out of 2023 here, IPOing. But let's look at market structure here. The hype chased this thing to 20 bucks. And market structure says we should consolidate at or below the IPO. Well, we're well below the range here from ramp up from the IPO, but we're also well below the IPO, around 10 bucks. Let's find a happy medium for a halfback. Watch for support around here, maybe $7 if it holds. Short-term reversion, maybe fill the gap back up here to like 940. I haven't looked into the fundamentals of this company, so just kind of take this with a grain of sand or a grain of salt or whatever they're digging in. Maybe it's one to watch. I'm going to keep it in the background as a theme to keep an eye on, but I think if tariffs start to do what they're supposed to do, things like this can start to see some volume and start to see some interest. Let's keep an eye on it around $7 and see what happens from there. Day traders, yeah, we'll be all over it. I can see there's probably more than just profit taking happening here. Let's see here. They changed their CFO. Who knows? Keep an eye on it though. It's a domestic company. I just kind of popped it off. I literally asked Grok to kind of give me a list of stuff that's beat down and stuff that is U.S. producing raw materials companies and go from there. There's a couple others to go through, and let me get into some of our stuff from last week as well. So let's go recap a couple things here. Pardon my runny nose. I even woke up with a migraine today. That's sort of messing with me. Let's see here. That was... Let me go back to the energy stuff we were looking at. Not really much interest there. Let's go with a couple other things. China. Let's have a look at BABA. Kind of hit that key support area. I drew this out a couple weeks ago. We were looking at about 132 for key support. It's there now. We did get to trade the trend a bit on this, and now we're at the end of consolidation at the top of the trend. This is where things can either go bearish or bullish here. If we start to see some sellers break this zone here, just look at the last support areas. It becomes pretty obvious pivot zones like 123.60 here, gap down to like 120, 117, 118. Very possible here, but pay attention to the daily too. We are below the 8 and below the 20, and we are likely to pull back here. So I don't pay all that much attention to the Chinese economy, but I do know that anywhere the market trades, when you have a big old impulsive move like this, you get the likely half back. Yeah, you get the idea. Could we see this run all the way back here to like 111, 110? It's very possible, but let's play with this first. Let's see, keep an eye on 132 and just kind of know that that's our critical support area. That's not really a triple top reversal, but when the right shoulder jumps up a little higher than the left, sometimes you're going to find some short sellers, and we're right in a critical support area. If we break down and gather some momentum beyond this area around 129, if you look at this doji here, it's pretty obvious there was some indecision here. Base, that was our critical support. This was our critical support here from this short round here. Stack it up, and that becomes a target for short term. If we break 132, 129 is an obvious target. Break 129, well, start looking for trend to give half back. We shall see. It can consolidate and boost back up from here. Surely we still have this reversion target in play here. It can hold here. But for now, market structure tells me that this is more likely to test these support levels first. I'm not saying short it yet, but I know where the targets are if we do say short it. So I think maybe we find some consolidation in this and play with these ranges first. In the long run, yeah, we can hit that reversion target, but there's a lot of weight being thrown around in the political theater these days, and I think China's kind of a main target, maybe. Just saying. Um, I can't stop putting out puns unintended in this one. Uh, People chased it up. It didn't last. That's a pun in itself. Hymns. But now we're kind of playing in market structure ranges here. We're at that resistance level. We're in a liquidity zone. We're kind of consolidating here. Can we see this give us a rebound? Well, let's check the daily chart. Where are we at? We're kind of swinging above the 20 period. We got the 8 period curling up behind it. Price is on top of it. 50 period is where we want to see a breach to see if we can be bullish or not. It tested it literally today, and it pulled back a little. So if we consolidate on top of liquidity here and we start to see a break above the 50, again, I'm not the most friendly to moving averages, but the obvious price action tells me a reversion's right up here at about 45 bucks. Trade the chart, do your thing, but watch this level. I think if we see some consolidation, we could see a good reversion trade in play. It was a good short for a little while, but let's be realistic here. This found support. It consolidated already for quite a while. The longer this period takes place, the bigger the impulsive move you get out of it. Not necessarily a short squeeze, but just money changing direction and flow. Sometimes when you break key levels, you'll see new money chase the trend, and typically you'll get a fast reversion. That's kind of how they happen. People call it the market kind of digesting information, and we just call it price targets. So bear with it. About half of that, say about 41.20, is a pretty obvious mark for breaking out of this range. It can give it to us. If it rejects here, we'll just wait patiently and let it hit support again. That's all there too. So it could potentially set us up for a decent trade for reversion, but keep an eye on this level. It'll give us a sign of when it's going to make moves. Marvel Technologies, to revisit one that we've played with for a while, consolidated. We're at a base where we could see a little bit of a reversion trade out of this. There's definitely a daily gap to fill back to the 200 period. Doesn't seem like undercut and rally material, but watch the resistance level, and it's basically at the base of our previous measured move. We can trade it in both directions. Why not? So we made the bullish MM. It chopped around up here for a while and eventually broke. It became a great short. Sure. But now let's keep an eye on this resistance level. If we break this, we got a pretty nice reversion trade set up for this as well. So keep an eye on it. Don't take it off your radar yet. NVO, yeah, we know the whole thing, but this might become a decent short now. And looking at the weekly, we got some range to beat. So short-term targets, the bears will be looking here, maybe around $68, $69. No pun intended or related to hymns. Come on now, get your mind out of the gutter. $55 could be the rest of that trend. We might see some support here if this gets to be a little bit too bearish. We are definitely under some key levels here, and we're starting to pick up some momentum. Can we see another gap like this? It's possible. We have two ranges here to get to, but for now, it's looking like a decent short. If you're already in it, watch this level here for whether it breaks or not. This starts to look like a double bottom, but we know that all the stops will be right down in the base of this wick. So if those get run over and we start to see some momentum in this, it becomes a good short. So watch this level. Not all double bottoms are reversals, guys. Sometimes it's just consolidation for continuation, and you have a primary on board here with it as well. So can it come back up and give us a reversion in the short term? Sure. We can pick up some liquidity here, but if it can't break the half back and it gets rejected again, your double bottom becomes a bear flag. It's pretty obvious. So watch this level. It'll give us some stuff to play with. PLTR, slowly chugging. We got into a good long position off of 87.40. We've reached pretty much a target for an MM. If I was to draw one, I'm going to ignore that candle and go with these 2 wicks here. Say that's a pretty good relevant primary. Secondary's been met, and now we're seeing profit taking here. Give this a minute. If it consolidates here, we could get a 1.5er out of it and maybe start approaching previous support in this mess here. But be nimble if you're in this long still. This is going to be a key area, and I think we might see some people pull it back to the 200 on the 4-hour here and maybe find some support, maybe trend back into this. But I'm being prudent and taking profit here, taking some risk off, and I'll wait for the next setup before I decide which way to go on this. So it was a pretty good trade overall, but we'll bear with it. An elephant to look at, Tesla. My God, man. I don't want to get into the politics of it, but to me, it doesn't make sense to, take your your planet-saving vehicle, so to speak. We know better. Yes, it taps into resources, and those who took the logical approach to this and didn't follow all the emotional politics involved realize what's going on. It is a company that is not just a car company, though. Remember that. 1, 2, yes, the resources were tapped. They're not necessarily like the green way to go. They cost energy either way. You don't get a free lunch in the world of physics, guys. We know that. But torching cars to protesting someone you don't like, that's kind of dumb. You're not doing anything, and you're putting some pretty toxic smoke into the air for us to all choke on, and it hurts the environment more than you like to believe. And if you're all about saving the environment, don't be lighting up Teslas because you dislike somebody. Get over it. Get the emotions out of this. Make some logical, rational decisions on this, and certainly don't support those people and applaud them. That's disgusting. Look at this from a business side of things. It's not just a car company. Everybody forgets about the robot army that's coming out of Tesla. I can see that there's potential there for a lot of factory jobs to really, or factories to really gain from that in the long term. But look at the price point on those things. I mean, they're talking around 30 grand to own a robot. Can it be domestically viable? Can you teach a robot to do your dusting and clean your house? I'm not saying it's threatening more jobs, but man, it would make life easier. Just saying. The future is here, guys, and we're kind of pivotal in this. This is not the time to be, going off and doing half-cocked things in the world. This is the time to look at things from a strategic point of view. And I see potential here. So I'm looking at another one of Matthew's products, TSLT. It only has monthly options lately. I have to ask him if he's going to push for weeklies on that. I think he is. It's just not quite there yet, volume-wise, but the monthlies have decent premium and decent open interest, so I might just start wheeling TSLT. It's a pretty good area to start seeing support on Tesla. And when people realize, hey, they're not just a car company, and you're not really doing all that much damage, insurance is going to pay for all of that. Get over yourselves. Us traders are going to take advantage of this. And should I reference GTA? In story mode on GTA, you could trade the stock market in the game. It's kind of fun. And one of the scandalous things you do is you go, blow up one certain brand of cars for a while, and the price comes down, and then all of a sudden you just buy it. That's what this reminds me of. Maybe that's the play. Who knows what's driving that? Who's making money off of this? Well, traders are, but who are the investors in this that are going to gain from this? I'm not trying to pull a controversial move here, but it just reminds me of a video game. It's hilarious. Long story short, the beatdown is done. We know where critical support was. It's bounced. That double bottom was clean. Reversion's here. We're almost there at 290. Pretty obvious targets. The rest of this reversion, 335. Yeah, we see where this is. I'm gonna look at wheel trading TSLT in this mess in the long term. Short term, Yeah, I think some debit spreads are in order here. And, we might see one more test of support after we hit the reversion target here. Maybe we come back to like 260 or so. Politics will come into play again, I'm sure. But if that's the case, debit spreads for the reversion, say some 335, 340 spreads would look pretty lucrative if you look at them, a few months out to expiration. That's a pretty obvious target. We love those halfbacks. In the meantime, maybe hedge yourself to be in a supportive role down here between 230 and 210. Sure, but we could see some debit spread plays come into play on this and swing trade alike. I think we got the obvious answer here. I know some people who caught this bottom, did very well. They're taking profit today, causing this red candle maybe. That's just profit taking right under that halfback, guys. Come on now. So let's see if we can maybe start to trend out of here. Either we give a quick pullback and another opportunity to go long. That's what I'm looking for, both in TSLT and in swinging some debit spreads on Tesla itself. And price action's price action, regardless of what the politics are doing. All this doom and gloom, all the negativity coming out there and selling it to you. We just see opportunity, guys. Glance at a chart once in a while. Look up from the all the worry in the world, and you'll see opportunity. It's there. A couple other things I wanted to give a quick look at, and then one that just came up in the news that I want to look at too. Let's look at Oracle. We were talking about this critical support area a while back. We knew that was a good opportunity to short it. It came back to the key pivots. I didn't mark out the measured moves because I didn't need to. Those pivots were pretty obvious. The gap was pretty obvious. Support levels pretty obvious. Come on now. I don't need these trend lines anymore. I'm going to delete them. And let's look at the obvious half back of this trend. Pretty simple. 160, 170. There's some news driving this here. This liquidity zone is pretty prominent. Look for another test of support, which we're seeing now. In the opening candles this morning, we tested half of that, and we found support right on top of this zone. We're seeing some buyers fall into it and accumulate here. We're threatening to move beyond this high from the pre-market here. And if we beat the half back on the pre-market level, say pretty obvious support right there, start to beat that, we might be able to trend here. So let's look at the 2 hour. We get above that, we start to trend. Reversion target right up here around 160, 173. Obvious stuff, guys. So I'm seeing some day traders play with it now, and swing traders will be right on the heels of that coming through this daily, looking for possibly over maybe a week or two. The 200 is continuing to curve up as price action is curved up with it. We might see it meet right at that reversion. Makes sense. If we breach it, well, previous liquidity zones pretty much pop right out of this thing. There's a previous liquidity zone that's also a fib target for this reversion. Things can get back into that zone pretty easily. And if you block this whole thing out, top to bottom, that is the middle. So if things start to really pick up steam, the swing traders start to trend trade, look for 171 to 172, maybe even 173 out of this, just as a pretty obvious zone. Let me adjust that. That's supposed to be on that wick. I don't know how I dragged that. Brain's a little fuzzy this morning. Anyway, I think we have a pretty good shot at a trend for reversion in short term. Look for this zone to hold. That is the red zone. If it breaks it, cool. The shorts will take it down to the pivot again. But for now, it's looking fairly bullish. Let's watch this crawl out. If it accumulates here and breaks into reversion, obvious targets. So I'll come back and follow this up next week as well. I'm kind of liking the setup, and the gap is done. We already knew that was likely to fill. They found liquidity and then some, even took out some stops down here, and hello, we're bulls again. So be in on this one. Definitely take a good look at it. A few others that I like to kind of point out. One of them's an energy storage company, and we talked about it a little while back. EOSE, yeah, it's still a penny stock, but it nailed our targets and did everything we knew it would likely do. And this was a reversion, by the way. So now we've got a really nice consolidation pattern, and if you ignore the spike that hit the half back here, this is starting to compress after broadening pattern, and it's a nice little diamond. A diamond pattern is neither a reversal um, nor a play to get into liquidity grabs, but when they come to a point, they tend to break pretty fast, and either we get a break of support here and we dip down and close this bar here, or we hold here and we start to rip back to the fib level of the previous high, which is probably about 480. If we can breach that, we might even trend here and start hitting the previous high fibs up here. So we could see, 580, 590. Market structure is already pretty much done with this. That's where this area is back here. And now we're in that trend area where it's going to start giving you impulse moves and halfbacks over and over again until things start to pick up steam. So watch for momentum. Critical support here is now right here, which is about half this trend, by the way. If we see support at 4 and it holds, and we start to trend out of here, this could be a decent long-term trade. And this was interesting to us in the Bullishbrs community as well. We were talking about this about a month and a half ago, and came up with all this stuff. So we've traded all this. This is now just wait and see. Keep an eye on it. It's in energy storage, both domestic and commercial, I think, and we could see this really become an interesting company when the rest of the energy infrastructure play starts to follow through, and then we start to see actual money being made in the transfer and logistics of it, as well as the consumption of it. So energy is a great play, a great theme to be in, and this is just one of many companies that we've looked at for messing with in this. About the only one I really don't like right now, Plug Power. Man, it sucks. I think Plug, as well as many other small caps, are all going to hinge on what happens with the interest rates more than anything. I don't know what their credit rating is, but it can't be good. I'll have to look at the balance sheet. I don't really do a lot of fundamental deep dives on stuff like this, but not looking like it's quite ready to do anything interesting yet. But I'll keep it in the watch list. It'll be something to keep an eye on, because when it does finally go right, they're in a good position. They have a pretty decent model that they just need to work out their short-term volatility in. So eventually we'll see something decent out of it. Let's see, we got time for a few more. I do take requests, by the way, so if you're watching on YouTube and you want to shoot me a ticker in a chat, I am here. I always watch it, and I'm happy to take requests. Throw me a ticker, even after this broadcast ends, if you feel like you want me to look at something. I'll make a whole new video just to go and look at it for you. I take requests, and I love price action. I love looking at charts. It seems to be something I was unknowingly born to do. Missed my calling going into the automotive industry, but then again, it gave me the ability to mechanically see things, and maybe that was something that needed to happen first. I don't know. I'm not a huge believer in destiny. You kind of make your own, but maybe it gives some guidance. I'll just say that. I don't want to get too philosophical on everybody. Couple other places to look here. Let me get into this other list here. Went over EAF and NFE, did all that. Got through that list. There's a couple others to look at. So MSTR. If you want to talk about what a diamond pattern do, there you go. We're in the bull trend channel of that, doing very, very well with it. We could see that this measured move is likely to follow through and finish out, so that's really kicking it. This is a revisit from not last week, but the week before. I think I looked at this. It is beautiful, and MSTU is where my wheel trade is. MSTR, pretty obvious debit spreads in here, just to kind of limit my exposure and risk to it, but it directly correlates with Bitcoin, and I'll be looking at that next. But we've pretty much nailed the reversion on this thing, so be aware that there will be some profit taking here, but I think this measured move is still in play. I think we could see a little bit of a pop and maybe reach the upper edge of this previous consolidation at least in this momentum here. It's pretty strong. Going into the 30-minute chart, I mean, you can see that, yeah, the day traders are all over this, but we're making progress, and I don't think the shorts are going to even mess with this thing until Bitcoin starts to maybe show us a flip. Bitcoin does tend to lead this, if that gives you a clue. Look there first, maybe correlate the charts together, and you'll figure some stuff out. It's pretty obvious this is very heavily weighted in that, so yeah, it's only obvious. Eventually the trend will end and eventually get back, but for now it's profitable. It's a good time to take a little risk off because we did breach the reversion target that we talked about very recently. And if you look at things, this block here was based on this primary move, and I just sort of dragged it up. That target's pretty obvious, guys. There's many ways to look at this, but the diamond is always really good at pointing to targets. You can think of it very similar to a wolf wave, but know that it's neither a reversal nor a full consolidation. It's more of a I precede volatility signal is what I like to see it as. So when you see a broadening pattern followed by compression, usually they break fast and usually they point to their own targets within the channels that they produce. So you got a bear channel and a bull channel, split the difference, throw your regression line in there. If this thing picks up sudden momentum, and Bitcoin will show you the way on that, we could very easily see it just rocket up to 350. That's obvious move, and beyond is pretty easy as well. Let's go look at Bitcoin real quick. I had it on my watch list. I could have just clicked on it. Reversion is not quite met yet. I have a target about 91, maybe an extension to 92 on this. I think that's pretty clear. We can see that the short-term measured move is underway here to like 89.6. That's in motion as well. I've been pretty much abreast with this very, very well. And we started to see this pullback here at a time where I was like, well, we still see pretty much blue sky all the way up to 92, but be nimble in the short term. This stuff will tend to give you opportunity to scalp while you're at it. And we're looking at this pretty much an impulse, gives half back that trend. Come on, it's obvious. Just keep that on your damn post-it note. Look at it every time I say that. Half back, half and whole. If you were to look at this in a way of measuring it as a fib, that wick went exactly to the 86.6 fib of this previous high. Obvious. I'm not looking at the wick, I'm looking at the bars. And we're likely to see this as what I like to call a high wave. So we could see a second wave breakout of this. So everybody else is thinking this is likely to, flag out here and kind of form, a typical 3 impulse bull flag accumulation. You can call it whatever the hell you want. All you need to do, all you really need to know is how to dance when the song comes on. The nickel is in the jukebox, y'all. It's definitely in play here. Let me build this up a little bit better. Bear my clumsy drawing here. We have resistance, but when you see something attack a fib with a wick like that, look at it like a high wave. This is like moving the goalpost out. We broke our angular, and this is now a target. If we break this, look for the next resistance level at the high, and look at this little area here as kind of where you would likely see liquidity. So short-term liquidity, that back, maybe even the angular support. If it breaks angular support, start looking for a move to regression, and so on and so on. Start seeing a move through regression, angular support test, and then if it ends up breaking below angular support, drag your box down here. It becomes a bear trap detector as well. All you need is half of the secondary impulse. That's it. So if this starts to give us some volatility in here, and it very well may, we have a pretty easy map to read. All we need to do is wait for the break and trade the break. So keep an eye on this guy. It's going to give us some pretty short-term moves here, I think, pretty quick. But in the long run, Mainly it's just trend to reversion, pretty obvious. And price targets are all over the place. Scalp it along the way if you want. It's just awesome to mess with this crypto when you scalp it. I'm telling you, it's a moneymaker when you know what to do with it. Price action is definitely clean on crypto, and that's why I love watching it so much. And then applying a leverage position to it by going through MSTR and the ETF MSTU. I see that that's just given me an amplified trade. So percentage wise, it's an obvious scalp. It's an obvious trade. And what's cool is Bitcoin kind of leads it. You can go break it down to the 5 and 15-minute levels, and you'll see that Bitcoin will make a move, and then MSTU will follow it. It's pretty easy. So if we have a leading indicator that is just another chart, it becomes obvious. You're not going to be the only ones looking at it. So preemptively remember that if people catch on to this, they're going to trade it too, and they're going to affect MSTU or MSTR, and no, both of them. And when you realize that everybody's looking at the same chart and things start to rhyme, well, it'll affect the equities as well. So we might get one last play out of this where Bitcoin's leading it, maybe two, but eventually people will catch on. They will know what to do with this. So when you start to see where the liquidity is, that's what I'm getting at, because retail is going to be the small part and institution will be the big part. And if the institution needs liquidity, who are they going to get it from? Yes, each other as well, but primarily retail. So if you know where to look for, where to expect those liquidity grabs to be, and you're retail, you get to not be someone else's exit liquidity. That's what happens. Just learn a chart. So anyway, yeah, there's your targets for Bitcoin and like, and I think we've got some pretty obvious plays starting to set up. So going right back to QQQ one more time. In the long run, when we start breaching these targets and we start seeing things kind of swing around, we see opportunity. And that's what we love to focus on when it comes to trading is opportunity. Tune out the noise. Certainly pay attention to news risk, of course. But when you see the news, usually it's talking about something that already happened. When you get preemptive stuff like threats or saber rattling in the political space, whether it's tariffs or sanctions or this or that, it's just short-term volatility. That stuff can be a bit preemptive, sure, and then the news will tell you what happened. Well, one way or another, the primary focus of the media is negativity because that is kind of a commodity. More people pay attention to negative things than they do positive things, and it sucks as a people. But it's the harsh reality. People tend to be more emotional about negative things than they are about positive things, and that also sucks. But us opportunists can see right through that crap. We don't need to really do anything but wait for them to finish clucking, and them being all the media and everybody who falls for all the crap. And when they're done clucking, things will move. But we're ahead of it. We already know what the outcome's going to be. See what I'm saying? So when we start charting and we start realizing, okay, well, there's an argument, there's a conflict, whatever, all this attention's going to it. You can kind of read the social connect to it on the chart, and all you need is the chart. You don't need to really be sucked into all that noise. You don't really need to get your emotions tied up in that. And being traders, that's one of the first things we learn how to do when we start to make the transition from learning to being successful is we harness that ability to shut our emotions off and just trade the chart mechanically like it's just a damn machine. When you do that, it's just, you don't even have to really focus on your P&Ls. You just trade the chart. You detach any fear you have to losing money from it. It just floats and you work, and it's just, you swing for little base hits here and there when you're scalping. You swing for some fences sometimes when you're swing trading, and things just kind of logically work out. And most of the time, you find accuracy in it. And if you go and back test every price target that we've called out from day one on this program, that's evolved into what it is now, from beating on Kramer to now we're going to give you what we're looking at. It's still from day one overall average 94.25% accuracy on our callouts for our price targets, and we make it look easy. The reason we make it look easy is because take our emotions out of it. Sure, we'll throw some witty banter around. We'll have some fun. We'll poke some fun at people who need fun poked at. Talking to you, Kramer. But in the meantime, that's just to pass the time while we're waiting for the chart to do what we want to do, or waiting for the chart to show us what we want to see. That's all. And if you take joy out of it, if you just focus on the positives and focus on the happiness, man, it doesn't just change the way you trade; it changes the way you live. And that's the greatest thing that we can really do for people, is to help people find positivity in life, regardless of all the garbage that's going on out there. All I could hope for. Anyway, I'm already on overtime. I'm going to be respectful of your time. I know you all have busy schedules to do, and I had already taken about an hour of that. So again, all I can say is thank you so much for the support. Thank you for all the likes. That really, really helps us to generate interest in this. Gets us out ahead of YouTube's algorithm and gets us in front of more people who I think really need to see this. I really think we provide a lot of value here, and more than some people realize. I really believe that. And I think I'm just going to keep hammering away at it. I'm going to keep putting out as much value as I can, whether it's for free or not. I don't care. I just enjoy being able to help people. I truly love that. And providing value is a way for me to help people. It brings joy to my life just in that. So thanks again. We'll see you guys later in the week. I believe we're bumping the Rebel Finance podcast to Friday this week. I have to look at the schedule. Don't quote me on this. We'll figure it out. But we're going through a couple things while Matthew's traveling and stuff like that. That's why I'm here solo today. He's got a busy life, so he can't always be here. But we're throwing together two different things. We're throwing a Rebel Finance podcast and the Watchlist, and bringing double the value and bring it into a much broader spectrum of audiences. So we tend to cross things over from one to the other and bring it on both sides. So we're getting in front of two different audiences in that, and we're bringing together. And my whole purpose in that is to also bridge that gap between professionals and traders and retail traders. And I think together we absolutely flourish. We just thrive on that when we work together, and we all realize that that old rising tide raises all boats. Thanks again, guys. I'm not going to waste any more time. See you next week, or maybe later this week. We'll figure it out. We'll get it out.